Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Very good morning, Nick.
Okay, two slides to run through. Let's kick off with the US dollar against the Canadian, a 4-hourly chart. Obviously, big headlines on the world trade. What are your thoughts there?
Yeah, well, we've had this supposed deal that's coming together now on NAFTA. It was touch and go last week. We had the deadline on Sunday. Funny enough, there was actually no news whatsoever, and you know, we've had headline upon headline. Freeland, their minister over there, constantly in talks and giving us updates on, you know, what the cream teas are like. And it all went pretty quiet on Friday, and Trump was very quiet. No one said anything, and then bang! All of a sudden, over the weekend, we find out there's a deal happening, and obviously. We came in this morning, trades open up, and you know, the CAD's well bid, and we're down at the 128 level at the moment.
Okay, so what's your field position at this juncture?
Well, we've got to look at selling the rallies, I think, in this pair now. You know, getting a trade deal done has opened the door even further for the Bank of Canada to hike. They're expected to hike this month, later on, about 24th of October, I think it is. The odds of that are about standing around 85% for a quarter pip hike. So that's gonna keep the CAD well bid. You've got to look to sell the rallies really anywhere back up towards the broken level here at 28, sort of 85, 80-ish. It was a strong double bottom before. That's the sort of level you've got to look at to lean in against the big levels. But on the downside, you know, the door's pretty much open now. The next level I'm looking at on my chart is around the 27.40-50 handle, the bottom of a year's channel we've had down there, which is it's held time and time again, just as the top side has, and that's the sort of area you're going to look at least for a pause in this pair. But if you want to take a long down there, then that's something to look at as well, just to play the text. But you know, make sure you know that you're leaning with the right bias, and the bias at the moment is for the CAD to strengthen. Understood.
Okay, let's move on to the second slide. Dollar yen, the daily chart, a nice smooth uptrend there. Is this set to continue?
Yeah, well, what we're looking at potentially is another big test of the wider range. I mean, you know, we were speaking about for several weeks how it's done nothing. You know, it's sat within a really tight range, sort of 110, 112. We've had that breakout now, the dollar strength in this pair. There's several factors at play for this. Obviously, we've had the rate hike, which prior rate hikes haven't brought that big a move. But what it does do, each time the rates go up, it increases the rate divergence around the globe, and it gives investors, you know, higher value to go and buy dollars and put their money into US assets. What we've heard about, particularly the last couple of weeks, is that Japanese buyers, Japanese investors, you know, they've been heavily moving into US Treasuries, which naturally creates a demand in dollar yen, and that's part of what we've seen. But technically, you know, we're up to this 114 level now, a very big area. You know, it's the top of the wider range of the sort of 114, 115 down to 108 range. So what we can see here is potentially a lot of traffic up here. If we get a break, then that's potentially a break to go with. You want to pretty much see the 1430, 1450 handle broken. And then if you get that confirmation of the break, as we've spoken about in previous sessions, go with that break. You know, that's a key to go long at those levels and see how high you can ride it.
On that note, we've run out of time, Ryan. Thank you very much indeed.
Cheers.